Let's go.
Welcome, everyone, to Zephyr's Adjusted for Risk podcast. It's Ryan Nauman, the market strategist here at Zephyr. I have another fantastic episode lined up for us today. It's going to be a fun one with lots of energy and maybe a fun story or two. You know, the IMN Real Estate Family Office and Private Wealth East Conference is fast approaching on October 9th and 10th in Coral Gables, Florida. And the excitement is building for this must attend event that connects private capital and premium real estate opportunities. Well, I have on a very special guest who is going to be the event's keynote speaker. But before we get started and bring him on, this episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. You know, my guest, he doesn't need much of an introduction, but I'm going to give it to you anyway, whether you want it or not. Now, I'd like to give a warm welcome to Grant Cardone. Grant is a founder and CEO at Cardone Capital. Grant is also featured on season 2 of Discovery Channel's Undercover Billionaire and is also a New York Times best-selling author. If You're Not First, You're Last, and 11 other business books. Grant is also the founder of 10X Studios, plus much, much more. I could go on and on, but I'm
Yeah,
going to
don't do
leave it
that.
there.
Don't do that. You bore people.
Yeah, so I'm going to bring you on now, Grant. Thank you so much for coming on. It's an
Okay.
honor to have you on. I'm really excited about this conversation. Let's
Yeah.
get right to it about
Let
the
me just say,
investing environment.
real quick before you get started, the event you're having in Coral Gables.
Yep.
Yeah, that is a great location. You guys that are listening right now, unbelievable location, tremendous amounts of prosperity and abundance down there, great real estate market. It's a tremendous place to hold an event. So if you're available or committed, is probably a better word, committed to learning more about real estate in your family office and creating wealth, that'd be a great place to go to learn about it.
Grant, and thank you. That's fantastic because listeners to the Adjusted for Risk podcast can get 20% off your enrollment fee. So great time to plug that too. And
Yeah,
like you said, it's a great
that was not
location
a
for
shameless
activity.
plug. Am I going to be at that event?
You're going to be the
Okay.
keynote speaker. And
Oh, I
so
did not know
everyone, you
that.
can
Dude, I
see.
didn't even know that. That wasn't a shameless plug. It was a proud plug. Because I know that my whole life, my life would not be where I'm at today had I not been curious and continued with my education and going places where other people were doing better than I was doing. That is one of the greatest, smartest, most efficient ways to hack your way to success or to the next level is to get around other people that are doing things bigger than you're doing. I did not know I was a keynote speaker there. I promise you.
You are. And so all those people that were kind of on the fence about going, you guys can see Grant in the flesh right there in front of you. Fantastic. I love it. Let's just talk about the current environment for any investing, whether you're investing in stocks, bonds, Bitcoin, interest rates are relatively high, still sticky inflation, geopolitical concerns, on again, off again tariffs. You go, keep going. But stocks continue to rip higher, reach highs, golden era for bonds, some people say. Where are the best markets to be in today, do you think, Grant?
Well, it's hard to say what the best markets are to be in. Let's talk about what the worst market to be in first.
Okay.
Let's just find out what we don't want to do. That's also has been a successful action for me in my life is, hey, what do I not want to do so I don't have to even research it? You don't want to be in cash today. Cash is garbage. When I grew up, cash was king.
Yep.
Cash is worthless. Cash is trash. You do not want it. You do not want to keep it. You don't want to save it. You don't need it in your checking account. You don't need it in a money market. You don't need it, period. I wouldn't even have an emergency account with cash in it.
Okay.
What I would have, because if I'm not going to do those things, then I need something that takes care of me. And then, so what I'm looking for is passive income from some investment,
Yep.
particularly on the way up. If I haven't created real wealth yet, if I don't have a net worth of, let's say, 10 million that I can access fairly easily, then on the way to 10 million, I need a lot. I need passive income. And the goal would be to have more passive income than earned income, or at least equal. If I'm earning 6 grand a month, I'm In the beginning, I'd want at least $1,500 coming in a month passive, then 3,000 a month coming in passive. Then, ideally I'd like to be at 6,000. And as I age, the passive income would go up and the earned income would go down. So that leaves us, what do we invest in? Bitcoin does not cash flow.
Yep.
Most stocks no longer cash flow. We're no longer in the 50s and 60s where you had big dividend stocks. Any company that's paying a big dividend is probably an at-risk company.
Yeah.
Bonds, maybe, but I mean, I think Trump just bought $100 million worth of bonds this week, so he must think that interest rates are going down.
Yeah.
But he's not in it for the passive income. He's in it for the score. So what am I down to? I'm down to a handful of things. Oh, wow, real estate cash flows. Oh, it does. I mean, the right kind of real estate, not land, probably not a farm, not a ranch, unless you're John Dutton. And he had trouble cash flowing his property. That's how the show ended, by the way. I don't know,
Yeah.
and he was a damn cattleman. So you know, I would start looking at multifamily real estate,
Okay.
retail real estate in great locations. By the way, great locations for both of these. I would not look to single family homes for this. They don't cash flow unless you could buy a bunch of them at scale.
Yep.
And I would add Bitcoin. If you could figure out a smart way to add Bitcoin to your real estate, that would be brilliant.
Yeah. Well, Grant, we're going to get to that shortly about real estate and Bitcoin shortly, but let's talk about multifamily units. That's arguably the biggest portion of your portfolio. I believe it's what, 14,600 units of your real estate portfolio's multifamily units. Why do you love multifamily units so much? What is it that is such a good investment for you and your company?
If you look at multifamily, it is so resilient. It is such a conservative, safe bet. And it's also a way to diversify a portfolio.
Hmm.
So while you say my concentration of wealth is in multifamily, but it's across 14,600 doors. Every time the rents go up $25 across 14,000 doors, I mean, the math is so fat, like it's just unbelievable. Let me just do this in real time. We buy best in class, great locations. So
Yeah.
keep that in mind. Will the rents go up, regardless of knowing what they look like? Will they go up $25 in the future? The average rent there is $2,000 now. Will they be $2,025 one day? Probably.
Yep.
Well, that's $355,000 a month more income. And the only thing that happened was the rents went up. I didn't
Yeah.
buy anything. Times 12, that's $4.3 million. So every 25 bucks is $4.5 million for our investors. And then when I divide that by the value, every $25 is $87 million. Every $25 rent bump
Yeah.
is $87 million for our investors. So if you're listening to this, you're like, okay, but our rent's going to go up $25. No, they're probably going to go up like $2,000 over the next 10 years. And why do I like it? I preserve my capital. I can't, I'm taking cash and I'm buying a building of 300 units that already produces income, preserves my capital. I get tremendous tax write-offs when I purchase the building that you don't get from stocks, you don't get from bonds, you do not get from Bitcoin or any of the cryptos. You don't get it from lending money out, and you definitely don't get a tax write-off from saving money. But you do get it when you buy multifamily. So I get tax preservation, I'm sorry, capital preservation, very difficult to lose money, tax write-offs of the
Hmm.
greatest benefit. And number three, I get passive income
Yeah.
with the ability for these rents to grow over long periods of time.
Grant, I have never talked to anybody that doesn't like getting a check. Well, they probably don't do checks anymore in the mailbox while they're sitting on the beach having a pina colada, right?
Yeah, yeah.
I haven't talked to anybody who just doesn't like looking at their bank account and there's a deposit while they're sitting on the beach. Everyone enjoys a passive income. With multi, you talk a lot about location. Is that really kind of your when you're doing due diligence, researching a property, is that your primary focus is location and just
Yeah.
traffic? What do you look
Yeah.
for?
The first thing I look for before location is the scale.
Okay.
Like if there's one unit and it's beautiful and it's a great location, that's great. But when the rents go up $25, it's still just $25.
Yeah.
So, I started with one unit. My first two purchases were single family homes, and I never did another one. I'm like, I'm done with that. Because when one person moves out, you're vacant and you're negative.
Yeah.
If you buy four units and one person moves out, you're 75% occupied. Two people move out, you're 50%, you're losing money. But if I own 100 units and two people move out, I'm 98% occupied. So you need scale. Number one, you got to have scale. In real estate, just my advice to everybody, like I've done all this stuff. I made a lot of mistakes. If you're not going to scale, leave it alone. Leave it alone. It will not be worth the problems. You have
Mm.
6 units and two evictions, you will hate yourself. But if you have 100 units and you have two evictions, you can give it to a lawyer. You can have somebody else manage it, no problem. So number one is scale. Number two is the location, not the asset quality.
Okay.
It is. I would rather have a dumpy asset in a great location than a great asset in a dumpy location. You cannot fix location ever. Okay, it's not up to you. It's up to the marketplace around you. You can't fix it. You can't spend enough money to fix it. Um, and I know guys that have tried to do that. Very, very wealthy guys that have tried to fix locations. Who was the guy that did this in Detroit? The Zappos guy tried it in Las Vegas. What's the dude's name that he had
Uh,
the big credit card company in Detroit?
yeah.
Quick loans.
I,
Anyway, I forget his last
yeah.
name. Simple name too, but both these guys were rich. They went into markets where they controlled the market. Nobody followed them in. And the problem is you can't be the only player in the market. You need activity in the market. So location, and then certainly if you could brand and concentrate in a market. If you
Okay.
lived in, let's say, Lake Charles, Louisiana, or Tahoe, and if you could own 4 or 5 of these complexes in a market, so that you could start branding familiarity and some kind of theme. All I'm doing is following what other people do. Like Starbucks, you'll see them locate, they'll concentrate. Wells Fargo will concentrate, right? The Burger King or
Yeah.
they'll have. I have one here, and 2 miles from here I have another one. 2 miles I have another one, maybe on the same street, because they're trying to get that presence, that street presence.
Yeah, fantastic insight. You're exactly right. We're seeing that in Tahoe a lot, branding to different area. And when you talk about real estate, the richest families over time, they accumulated their wealth in real estate. You can go back in time and pick the richest families ever, and it's typically real estate. That's the case here in Tahoe. The wealthiest people from Tahoe, it's through real estate. Why do you think more people just don't invest in real estate? Is it hard? They think it's hard. You need money up front. There's some misconceptions there that why it's not done more
Yeah,
often.
I think the first reason, I think some of the things you said are very, very true, but I think the first one that people don't pay attention to is they buy the wrong kind of real estate first.
Mm,
And so what people do, I did this. I was 28 years old and I went and bought a single family home. Well,
yeah,
if your first inclination is to go buy something to use it, you miss the whole purpose of real estate.
yeah,
Okay. The purpose of the real estate is to earn money from it. Jay-Z said, "Don't get high on your own supply." That's what most Americans do with houses. They get high on their own supply. They they call it a mortgage, but it's really rent.
yeah,
And then they justify it, say, "But I'd rather pay a mortgage than pay rent." No, you're paying double the price to live in it,
yeah,
and your money's tied up forever. You're funding the activity. It is not an investment.
yeah,
Like you could lead with this. This will be your clickbait right here. Grant Cardone says a house is not an investment. It's not. It's a liability.
yeah,
Okay. It is not a place to make money, earn money. It's not even a place to store equity. Okay. There's $12 trillion trapped in equity in people's homes. That is not a good thing because that equity is not in the marketplace working.
Yeah.
And you referenced earlier about the wealthy people. This is not for like the last 20 years or something. This is for the last 2,000 years. The
Yep.
wealthiest people that have ever walked this planet own the real estate. They control the real estate. And the Catholic Church owns more real estate on planet Earth than any other group.
Yeah.
So the Rockefeller, like all these groups, the Morgans, they all own real estate. You know, the Rothschilds, they owned real estate. They owned, and they didn't own some of it. They owned as much as they
Yeah.
could. They concentrated. So that's kind of what I'm following. And so I would tell people, don't buy a house first, buy the neighborhood,
Okay.
rent the neighborhood, and then have the rent that you're earning from the neighborhood, the scaled housing that you bought for as an investment. Once you have enough of those assets that are cash flowing, then if you want to go buy a house and waste your money, go do it then.
Interesting. And do you find too that now with mortgage rate 6.5%, it goes along with, is it cheaper, just better? You know, people are going to roll their eyes at like just the rent when
It
you're
is
not
one. It
paying.
is one in the top 25 cities in America. It's not cheaper to rent. It's 50% less to rent than it is to own. I'm in Miami right now. You could go to any of these condo buildings. I'm looking out my window right now. You can pay 4 grand a month, and the guy that owns it's paying 10. The owner's paying 10,000 a month to own it, and you're renting for him for 40% of what it cost him to own that asset. And he's got money invested in it. Now you can walk in. If they don't treat you right, you can leave.
Yeah.
You're going to be there 10 months. He could raise the rent on you. Okay. At which point you get to leave. And you're like, yeah, but I need stability. No, you need your money to grow. You need mobility. I need mobility. I need stability in my money, not where I physically live. And you can always negotiate a 3-year lease or a 4-year lease or a 5-year lease. I mean, there's
Yeah.
plenty of housing to lease. You know, we always say there's a shortage of housing. Look, I could find 50 houses to buy tomorrow if I wanted. And so if you're willing to pay the price, there's not a shortage.
Yeah. You're exactly correct. And we in Tahoe, we talk a lot about shortage of homes. A lot of people have second homes, and it reduces the inventory for your average person. But there's a lot of homes. You just got to pay 750,000 dollars for an average home. For a
Yeah,
lot of people here, it's a lot, but you can do
there's a
it.
shortage of affordable housing,
Okay.
whatever that means, by the way.
Yeah.
But
Exactly.
there's a shortage of affordable transportation too,
Yeah.
unless you want to Uber, and Uber's very cheap. You know, there's a shortage of phones that don't cost, that are free, unless you want to work for the government. Like you just got to figure out what the shortage of what. They
Yep.
tell you there's a shortage of land. God's not making any more land. Okay, well, get in a plane and travel across America. You're going to see vacant land forever.
Yep.
Drive across Texas, and all you'll see is land. You'll get sick of looking at land. They say there's a shortage of oceanfront property. No, there's not. All you got to do is go up the coast of California. You're going to see it forever.
Yep. Yep.
So,
Exactly. Those
you know,
flyover states, they're plentiful, lots of land.
yeah, yeah.
Let's talk about tariffs. On the show, I talk a lot about tariffs, but the impact it has on equities and fixed income markets. What about real estate? What is there much of an impact on tariffs have on real estate?
Well, I'm excited about the tariffs because we own real estate and we don't. I don't. I'd prefer them not to build more, right?
Yeah.
Because then mine becomes more valuable. So the tariffs make everything more expensive. Copper, steel, glass, all will get more expensive. And when things get more expensive, it inflates the value of what you have. We're not builders. We don't build. And this is
Okay.
completely selfish. I might be thinking only of myself and my investors here, but that is my job.
Yeah.
Um, but when it becomes less and less affordable to build the housing, they'll build less and less housing. So you got interest rates that are too high. By the way, they're way too high. They're probably double what they should be, maybe
Yeah.
even more than that. Those rates have to come down for single family homes to sell again. There's plenty of single family homes to sell, but they're not selling because the rates are too high.
Yeah.
So rates are too high, and tariff is another kind of tax. Um, we import most of this stuff. We should be building it here.
Hmm.
We have enough timber. We can build steel. We used to. We don't actually need to import anything. We do this for other countries. So I love what Trump's doing with the tariffs
Hmm.
because it would make us less dependent upon them if he actually enforced them. I don't believe he does. I believe they're actually threats,
Yeah.
not actual enforcement, but it could slow building down for a moment. And if it slows buildings down for a moment, which it looks like it is, permits are off, then anything that's already built should become more occupied and makes it more valuable.
Hmm. You bring up a good point. If you're not building, right, that's a good thing. It's raising the value of your real estate, your
Yeah.
buildings that you already have. Great insight there, Grant. Bitcoin, you mentioned it earlier in the show. Hard not to talk about Bitcoin. You recently completed the largest Bitcoin plus real estate deal ever. Why did you decide to combine Bitcoin and real estate? To me, it seems kind of like a risky move potentially, but you did it and did it successfully.
Yeah. So we're on our fifth transaction where we take apartment complexes and we take the value of the apartment complex and we add Bitcoin to the purchase. We basically merge the two together and we think it's a brilliant way to diversify the portfolio
Yeah.
and actually build a super investment. Because if you look at real estate and Bitcoin, first of all, they're similar and not similar in many ways.
Okay.
One is very liquid. Bitcoin is 24/7, 365. I can trade it on my phone right now. I can buy it, get it 24 every day of the week, 2 o'clock in the morning on a Sunday night. Real estate, on the other hand, um, this property right here in Boca Raton is you can't sell that tomorrow. It's $1 billion worth of real estate. If I wanted to sell it, I couldn't sell it tomorrow or next week.
Yeah.
It probably won't sell if I got a buyer today, it still wouldn't close for 90 days. So I have one that's extremely liquid, like at light speed, and I have one that's illiquid. I have this property will cash flow. The Bitcoin doesn't.
Yeah.
The real estate depreciates in value with a tax write-off. It actually appreciates with tax write-offs. Bitcoin does not provide me with that. When I meld these two things together, long term, both of these should be worth more money in the future than they are today. Both of them benefit from the printing press. Okay.
Yeah.
One of them is extremely volatile. One of them is very stable. One of them just kind of moves like this. Like if you look at the rents in this country, I saw this graph yesterday. Maybe I'll send it to you and your audience can see it. This graph here represents the blue line is rents in America,
Yeah.
and the red line is mortgage. I know I'm not straight here, and it might be hard to look at,
Nope,
but
it's perfect.
and I got all these thumbprints on my phone, but you see the mortgage payments spiking.
Yep.
No matter what mortgage rates did, okay, the blue line, look how stable that blue line is.
Yeah.
It just keeps. This is since 1995, by the way. That's a 30-year graph. That blue line just did this the entire time. No matter what mortgage rates did, no matter what housing did, no matter what the stock market did,
Yep.
those rents just kept doing that the whole time. That's what my real estate's going to do while my Bitcoin creates all this volatility. As long as you have time on both of these, you end up with the super product.
Hmm.
And we've done five of these. I'll have a dozen done before the end of the year. Before October, we're actually going to announce something to go to the public markets probably sooner than that. And I think, like I'm a big promoter guy. I believe in the stuff I do. I think I'm going to revolutionize real estate investing and Bitcoin investing with this product.
Grant, I'm glad you brought that because it wasn't that long where you were, I wouldn't say you were skeptical of Bitcoin, but you just, like me, I just didn't understand it.
Yeah,
Right. I never invested. I was like, gosh, I should have invested in this thing 10 years ago, but I just didn't understand
yeah.
it. And I'm not going to invest in something I don't understand
Yeah,
until
exactly.
recently.
Yeah, I think that's smart. Look, you said I'm skeptical. I'm skeptical about everything. I'm skeptical about every person I meet. I'm skeptical about my kids. Like, I don't trust the economy. I don't trust the government. I don't, like, I'm skeptical. And if you're a good investor, you should be skeptical.
Yeah.
It would be, it would warrant when you're driving a car, you're like, I'm watching him and I'm watching this and I'm watching that. And I'm like, okay, I don't trust these people. I do trust myself. I don't trust them. And I don't trust anything I don't understand. Why would I?
Yeah.
And Bitcoin is a new thing, right? I was given Bitcoin 13 years ago for a speaking gig. And somebody offered me to speak at an event. I think they wanted me to come in and talk about marketing and how we built this large audience online.
Yeah.
And I said, yeah, I'd love to. And then my team sent a contract for the price and the expenses. And they came back and said, we can't pay that, but we can pay you in Bitcoin. And I'm like, well, I don't know what Bitcoin is. And they said, well, it's this. And I said, is that the only way you can pay me? And they're like, yeah. I said, okay, send it to me. I don't know what it is, but I'll do it, you know? And because I was already in Vegas, I was going to be there anyway. And I liked the company and I liked the guy that ran the company. And I'm like, yeah, I want to do it anyway. So
Yeah.
he gave me 115 Bitcoin for that speaking gig. And I still have that Bitcoin today. And that was my introduction to it.
Fantastic.
So over the period of time, though, over 13 years, I started looking into it. And then we slowly started using the cash from our real estate.
Okay.
The cash distributions from our real estate, we started using our positive cash flow that we didn't need to live on, and we would buy Bitcoin with it. And then we started doing this for investors.
Yeah.
And then, like last month, we sent out $8 million to our investors. This year, we sent out $100 million in cash distributions to our investors.
Yeah.
These are not banks; these are regular
Yep.
people like yourself. Well, had I been doing that, I've sent out about $400 million in cash over the last 7 or 8 years. Had I sent that out and done Bitcoin, sent out Bitcoin instead, I would have sent $4 billion out to my investors, not 400 million.
Well,
I'm
yeah.
sorry, $44 billion, not 400 million.
Hmm.
So when you
Fantastic.
start understanding that we're just combining two asset classes to create basically a new asset.
Yeah. Well, and it's a good point too. Like I've done a lot of research with Bitcoin, and Bitcoin, whether you're a skeptic or not, the impact it has on investment portfolios, and it's lowly correlated. And that's really what opened my eyes to it a couple of years ago. It adds benefits to an investment portfolio. So why not? It's like any other asset class, which it is. It's an asset class.
Yeah.
Um, Last thing here, traditional investors, a lot of financial advisors I talk to, it's all about invest in your 401k, invest in IRAs, get that free money from your company, do whatever you can, insurance, traditional investment strategies. You advocate for investing in income producing real estate rather than those traditional retirement accounts. Can you kind of explain your belief in that, in this approach,
Yeah.
for
So
long-term wealth?
look, and I have an IRA, I have a 401k, I have a Roth. I did all that. I did the 90-day savings account. Everything that I was told, everything you've read in books and your audience has read in books, I did it just like the whole middle class. Then one day I woke up and said, most of the middle class is doing exactly what they're told to do. They're not stupid. They
Yeah.
work hard, they save their money, plan for retirement, they buy a house, they have their 90-day account, and it ain't working. So most everybody is playing by the house rules, and most people are basically under the rule of the house.
Hmm.
And so I started, like you talked about being skeptical. I started looking at, hey, what have I been doing that's actually cost me that the super wealthy don't do?
Yeah.
So if this offends anybody, I'm sorry, but the Walton family, they don't have retirement accounts. Okay. Well, they don't need them. Exactly. They don't depend on Vanguard and Merrill Lynch and Charles Schwab. to get their money when they're 75 years old and then are forced to withdraw 4% a month or
Yeah.
4% a year that will be taxed at a higher rate 30 years from now than it is today. So we started looking about how can I use real estate to be my retirement account so that in 30 years, if the rents have gone up over 30 years in the right locations they should have, that would become my retirement account. And back to your earlier question about why do more people not do that? It is because people think, oh my God, it's complicated and I got to pick up rent and it's going to be a lot of work and it's going to be, I don't know how to do this. Okay. Well, guess what? You're not going to know how to retire without money too.
Yeah.
So like what part of hard do you want to deal with?
Yeah.
And I'm 67 years old. Like it doesn't take a lot of energy to go pick up rent. As long as my body works, I can go pick it up. Now, if you got 100 units and you're 67 years old, you don't need to go pick up the rent because you're paying somebody at the property to do that for you.
Yeah.
So I would just tell people, look, if you know rents are going to go up, the buildings that we buy will be around longer than most of the companies in the S&P 500.
Yeah.
Okay, I need your audience to hear that a second time. That property I showed you earlier, this property will be in Boca Raton at that address 100 years from now. There's less than a 7% chance that any of the Fortune 500 companies will be around 100 years from now. Less than a 7% chance. There's a 100% chance that building will be in that location in the year 2125. I won't even be around anymore, but
Yeah.
my kids and my grandkids will be getting rent checks.
Awesome. Grant, fantastic conversation. I knew it was going to be fun, did not disappoint. I'm sure our audience had a lot of fun too. Thank you so much for coming on, sharing such great insight. And thank you, everyone else, for joining and listening to this conversation and the great insight. Again, Grant, we just announced that he is going to be at the IMN Real Estate Family Office and Private Wealth Conference. So thank you. If you want to join and attend the IMN Real Estate Family Office and Private Wealth Conference, and other IMN events, go to imn.org. You can also get it, like I said, a 20% discount by going through the Zephyr's Adjusted for Risk podcast. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel and Spotify. And please be sure to like and follow us on LinkedIn. Thank you very much and have a great rest of your week.